Hello. So today, what I want to talk about is welcome back. My name is Lynette Wangarinjoki, and I call myself the cold trader because this is an assignment that God has given me, and I want to implement my trading as a way to glorify God. So, I usually trade USDJPY and gold only. This is because I did not want to start mixing my mind, and my strategy works well with UJ mostly. So there are certain things that I would want to. So today is just a recap of the 28th April 2026, whereby like I am just showing you guys how I usually trade and the kind of setups I take. For example, if you look like gold, we have been so bearish. I did not take up this pullback. I was waiting for this pullback, but I did not take the trade because I just felt like I needed to see something. So I'm waiting for this place to be broken down, then retested so that I can take the trade. That one I'll be quite comfortable with. But overall, we have been bearish. We have been bearish in gold and USDJPY. What I may take because we can see clearly in the weekly. Um, in the weekly time frame, we can see that price has entered a place whereby we have SNR, but now we come to realize that we are in an SNR zone and price is choppy. Now, what does that mean? It means because here we are establishing a consolidation. This is a place whereby you have to take caution, and when you just need to wait for it to break from this level here, up here. You wait for it to break from this level called 160, something like that, or it breaks this week's. You see where there's a gap SNR, that's where we're going to break. For people who are asking, show us how to trade your setups and everything, I'm gonna come up with lessons every single. We are going to start the series very soon. But for today, we're just looking at the outlook on Tuesday, 28th April 2026. And as you can see, guys, in the weekly analysis, we are in a consolidation area whereby we are not sure whether we are selling or we are buying, and especially today the price is at the 50% level of the consolidation, so this can make you lose a lot of money if you are not careful. Now, what am I waiting? Price did not tap my SNR, so I am going to wait. Also did not break up below, so I am going also to wait. But if you look into the lower time frames, for those who are doing like quick scalps or like they are just like they want every single day trades, you can also see in the daily that the market is also in a range. And for today, we have been bearish for quite some time. And if you could, I don't want to go like that fast, but in the daily, we also have the consolidation, but we also have a good structure. You can see that we had a W, and right now it's like the consolidation, and then most likely when I see a W and like we have tapped that area several times, I usually assume that the consolidation, when it ends, we are going to break above where the W was, or if it's an M, we are going to break below where the W was and the consolidation happened. So right now I'm just waiting for good entry level so that I can pull the trigger for buys long term. When we go to 4 hour, we can clearly see that price is very bearish. So if you are looking to buy, you should be looking to buy at this level of 158. If you're looking to sell, you should be selling at this level of 160. because that's where the price is going to show you the direction. But overall, we are in a consolidation, and what I'm just going to do, I'm just going to sit back and relax and watch the game as it plays. So that's it for USD JPY, because if I go to the lower time frames whereby like the daily is telling me we're in a consolidation, the weekly is telling me we're in a consolidation, the 4 hour is telling me we're in a consolidation. I do not want to go to 1 hour or 30 minutes or 15 minutes, because that will not give me a precise entry, because it is going to make a lot of noise in my ears. Even though today I had some buy setups whereby I can explain. I wanted to see this level get broken. You can see the last low was broken, this small one at the 15 minutes. When it was broken, when it was broken by the candle, it was broken and it was retested by this candle. This was a valid pullback. It's retested and we broke above. And also here, I wanted to see when it breaks above, will it come and retest that really immediately, or it's going to take a while? And it did retest and moved up a little bit. And this is where we call the OCLs, whereby they give price, they move price in the good direction. We can also see here there was also a pullback and are retested in the lower time frames, whereby it indicates that these markets are going up. And when we saw the initial break of forming now a church, or we call a CSD, change in character, we saw that price came and sharply retested it and moved away from it. And now the key thing that I was waiting here also was, you can see that price now has broken this area. And once price has broken this area, now we are moving to the upward side. And remember, this is Asian session that it created this move, the lower move. So if you are early enough, you could have gotten the cells. But for me, it is all about the seeing the price action, and I usually go to the 15 minutes as my lowest time frame so that I can catch my entries. And you can see clearly we had good entries. We had good entries, but the only thing that happened, this was my trade idea. I'm going to move to this so that I can show you the trade idea. Now, this was the trade idea, you see. So I wanted it to come pull back by, and it did that, and it came close. I wanted here to be my TP, but the next thing, this week ilinitoa nje, because I had forgotten that this was also a valid area to look for buys, and my stop loss was hapa chini, so nilitolewa nje before hata niingie. So a valid one could have been here, and you put your stop loss below the candle, because I don't see the reason why the candle should go down if it's indicating we are going up. So, and you target here, and mostly my risk to reward inakuanga 2, and for the long term ones inakuanga 4. If you see, it's 4. So usually my trades, my safe to go zinakuanga 2, 1:2, or if I am targeting long term, it's always 1:4. And you preserve your risk, you preserve your capital, because there's always, always, always a way to make money in these markets. So this was it for me today. If I could have entered the trades, and what I'm learning is I could have rectified instead of putting it here and then got tapped out. You get me? Like nilikuwa nimeweka hapa, and I was tapped out because my reasons were nilikuwa na target this. But I also came to realize that this was an OCL and it could have reacted. Na unaona ili react ikarudi chini, venye ilirudi chini ilinitoa nje na ikaendelea kwenda juu. So those are the mistakes that we usually make as traders, and you refine them as you go. you refine them as you go, because human is to error and we correct our errors. And you see how these trades are, whereby we have minimal or low risk, because now you see it just tapped and went and hit your GP and you feel good and you go home, sleep, so and because we're in a consolidation, you don't want to target too far, because you already know that price can go either way. And for gold, I've been seeing it. Let me do gold for the next time right now, so that like my video won't be too long. Let me analyze it and then I'll come and give you the feedback. Bye.